Good morning. Welcome to another episode of Money in the Bank with Frank. Today we're going to go over wealth management services and what they are. Wealth management services are some of the most high-level and comprehensive financial services that exist. While financial planning services can help with individual financial matters and asset management services typically deal with investments, wealth management can encompass every part of an individual's finances, from taxes to estate planning, charitable giving, and more. The question really comes down to, should you pay for wealth management services? And the answer to this is pretty complex, right? So this will depend on your specific financial situation. So it's important to make sure that it fits in with your overall financial plan and goals. The big question, what is wealth management? It's a comprehensive service that not only offers client investment advice, but it also helps with a huge range of financial and financial adjacent matters that affect different parts of a client's financial life. Let's talk that down a little bit. What does that mean? That means if you're in a good place financially and your number is pretty high, there's a good chance that you donate to charity. There's a good chance that maybe you have a spouse, maybe you have dependents, maybe you don't have any of those. Maybe you're charitably inclined, maybe you're not charitably inclined. All of those different things that you choose to spend your resources on have implications among all of the other things that you have, which could cause taxes later. It could cause taxes now. It may not, done right, you may be able to avoid all that stuff. And that's where a wealth manager is going to come into play. If you look at a financial advisor, the difference between a financial advisor and a wealth manager or a wealth management company, an advisor is like a quarterback that's going to hand things off and tell you what you might need to do. A wealth manager is going to actually do it and gets the resources, has the resources to accomplish all of those goals. And that's, in a nutshell, the difference between the two. Now, wealth managers typically develop complex and holistic financial plans that detail information about investing, as I said before, taxes, charitable giving, estate planning, and other relevant needs or goals. But in turn, they typically manage your investments with an eye towards long-term goals. Now, because keep in mind, your long-term goal is maybe family, right? You might have family that's going to continue to live your legacy. So it's not necessarily a short range, we're going to build your assets on that. It could very well be that, but it's not likely to be. Wealth managers also help set up and review your goals. They rebalance your portfolios and assess whether there are other needs and services that could protect your wealth. This could include managing charitable giving, tax liabilities, business plans, life insurance. Because of its complex nature, wealth management is typically reserved for individuals who are at least above the high net worth threshold. And that threshold is seen as someone who has at least $750,000 in investable assets. That doesn't mean the value of your house. That doesn't mean anything else. It means liquid assets or $1.5 million in net worth. Now, I think that is a fairly low number. There are quite a few people that hit that threshold. If you take a look at values of housing, and if somebody has $1 million house and $500,000 liquid, you're not wealthy. So, again, it's dependent on different circumstances. Now, who can access wealth management services? They're typically available for everybody, but they're expensive. So due to the comprehensive nature, firms can require high minimums, such as $500,000 or $1 million. They're probably going to charge additional fees, which cover the costs of wealth management services because they're so comprehensive. And just for references, financial advisors at most of the firms typically charge a fee based on a percentage of assets under management. That's for portfolio management services only. These rates generally reside somewhere around 1% of assets under management. Rates can drop as you invest more with the firm. Managers can also charge clients in other ways, which includes hourly charges, fixed fees, commissions, performance-based fees. Those are pretty interesting. While the specific amount you pay for wealth management is going to vary significantly by firm, you'll probably need at least $1 million with that advisor. So, for example, as we know, one of the foremost and preeminent discount brokerage firms, Fidelity Investments, has a wealth management division. They require a $10 million investable assets for private wealth management services. So that gives you an idea of how complex they are. And if somebody who is that respected, but also considered a discount brokerage firm, has a $10 million minimum, you see where I'm going with this. Now, It also has a simpler service. The firm has a lower minimum of $250,000, but you get what you pay for it. Now, when should I consider wealth management? Ultimately, whether wealth management or other financial planning services are worth it completely depends on your specific financial situation. For example, are you looking to build an estate plan for retirement and then make investments all at once? Then the holistic nature of wealth management might be for you. Now, let's say that you have $1 million in investable assets, you set up a trust for your children and grandchildren, you're the beneficiary of your parents' estate. A wealth manager can help you invest your funds, provide trust and estate planning services, and work with you on a financial plan that'll minimize taxes and income. Wealth management services generally benefit clients most as they acquire more wealth to invest or management. But this isn't a hard and fast rule. As we mentioned earlier, some firms offer simplified services at lower minimums. Now, additionally, it's also worth noting that since wealth managers typically combine different strategies to protect client wealth, these services could benefit you if you don't have enough time or resources to manage all aspects of your financial life. This is really important. So keep in mind, what is your time worth? If you are a plastic surgeon and you make, $50,000 per nose job, do you really have the time and the patience to be staring at a screen all day and managing money and then figuring out what the payroll needs are? It's a waste of money, and maybe it's worth hiring somebody to handle that. And that's where a wealth management firm might behoove you. Of course, there's a fee for this hands-off approach. In other words, you need to decide based on your own needs if you think a wealth manager is necessary. Now, the bottom line is wealth managers can bring both insight and a valuable experience to your assets, but wealth management services are often only available for a high net worth individual. This isn't always the case, though, so do your research at firms in your area to find a good match. And if you go to the Certified Financial Planner website, the CFP.net, you can put in your zip code and they can find some certified financial planners near you. That is a great start. Clients often engage in wealth management when they have complex situations that require overarching services. This could include charitable giving, tax mitigation, investment management, estate planning, real estate, among other stuff. There's a few other services available that are widespread. They're making a strong offering for those who need it, but as stated before, each person's situation is unique, so decide for yourself if it's worth it. Thanks.
Thank you for watching this programming on The Merge. What's The Merge? I don't know. It's just something cool and catchy. Like, subscribe. We'll see you next time.